We back once again. So here is sort of the model that has kind of put a lot of the pieces of the puzzle together for me as far as this cycle that we go through every 4 weeks, and uh, basically knowing when the Van and Charm are coming in, when the dealer flows are coming in, and when they're gone, and then who is basically going to get squeezed. Every single time it's somebody getting squeezed. A lot of times it's the Bears. This time I think the Bulls are going to get absolutely demolished. That's just my going theory into what's going to happen going into this next OPEX and into the end of the month. I was of the mind that we're probably going to see some buying, and I'll be honest. I mean, I got trapped today as far as this gap up. My bias killed me on Friday, where I would normally catch a bull trap like on Friday. I would have normally caught the bull trap today. And at this summer, essentially the last melt up here, it got me scared. I was afraid to pull the trigger. I knew the market was going lower, and even in my video this morning, I was going, hey, 4,100 is possible. Even though normally I wouldn't have said that. I would have said we're easily going down to 4,000. Very, very obvious to me. So hindsight's 2020. We're gonna hopefully get the mojo back here and be a little bit more objective, instead of holding on to these, biases and fears or whatever I got going on. So, SPX, this is the picture this morning. 4090 was the vol trigger. We didn't even get up there. I was thinking they were going to attempt it. I was very cautious that they would get it up there, and that was that bias kind of kicking in that I even thought that. To be honest, looking at this, I would have said, holy crap, just buy puts normally. So, obviously, again, 2020 is your best friend when you're looking back. So 4100 got shifted higher. That typically when you see the shift higher on the vol trig, it didn't shift a lot. It went from 4090 to 4100, but that's usually bearish in general. It doesn't mean the world's going to end. It just means that folks were buying more puts, so that volatility trigger actually shifted higher, or people were closing calls. One of the two things was happening. So that is a bearish sign for me, seeing that moved higher. Again, I'm a perma bear in general at heart. I think the whole system's a fraud. So I'm naturally already going to lean bearish. But like I said, I got so fed up with the last melt up that I even turned bull, and that's what it does to you. So it's that moment where you think everything, it can never go down again, and then they hit you with the rug pull. I know it's coming, and it just takes so long for it to happen. Okay, moving on. So there's the SPY. I wanted to start incorporating the SPY in here as well, just to see if they line up with the SPX. So SPX, nothing's really changed with the levels. You can see, they had a lot of gamma exposure there. All that got destroyed, got eliminated. So that's all gone. They're still building down here now, down the delta curve here. So they're holding that 3,900. They're holding the 4,000. Obviously, they were trading underneath. We closed underneath it. I would not be surprised to see a move down into 3,900 at this point. Sitting here, maybe a couple attempts up into this 44,000, 410, 420 range, but likely for the rest of the week, just going to start heading down to this 3,900. That's sort of the general path. Looking at the SPY, 400 being a huge level. Again, we closed underneath it. I would not be surprised to see 400 tag again, but eventually probably gives way to the 395, lining up 39 and 390, lining up just with the SPX as well. 415 on the SPY for the total vol trigger. That's way up there. When it's way far away, and you see this huge spread between the vol trigger and price. I think I need to create an indicator or something like that where we calculate the spread between the price and the vol trigger, because the greater the spread, it just seems like the more bearish you're going to be, at least in this case. As that vol trigger gets closer to where price is closing, that sort of tells me that folks are closing out their puts. Like in this case, they'd be closing their puts out, or maybe buying calls, and that would shift that vol trigger lower. But seeing it so far away, it just tells me that you just hold your shorts. Don't panic sell them at the lows. We just continue rolling down until we see some kind of capitulation, or until we see this volatility trigger shift on a daily basis. and maybe even on a quarterly basis. Okay, so this is the GEX for Friday. So we went from quarterly on the SPX, quarterly on the SPY, and we're going to look for quarterly, and now we're going to look for Friday first, and then we'll look at tomorrow and Thursday. Friday 41.15. This didn't change. So the picture here. Okay, well this is from this morning. This is today. This actually did shift. It shifted lower for Friday, so it looks like some of the puts that were for Friday have been closing out, or they were closing their buying calls. I did see quite a bit of calls on the blow, so I think folks are trying to prepare for a potential bottom here, but we're seeing some build up here. This is into Friday. 4,000 would still be the big level, but I would not be surprised to see 39.50, 39.25, and probably even lower, 3,900. It just doesn't show it on the scale. 410 lining up for SPY for Friday. 410, 40.70. So that's interesting. They brought the vol trigger down on SPX for Friday, but on SPY it's just sitting here at 410, whereas the quarterly, the GEX-N, is at 415. So not a huge difference there. So basically you're still fully bearish, and 4,000 still kind of being the level. Once that 4,000 GEX gets hedged out, I think that's when the free fall happens. So keep an eye on the GEX and the SPY and the SPX and throughout the day. Once we start seeing this shrink and start seeing some build up here on this 395 or the 39.50, I think that's your trigger for much lower, and it might even happen faster than that. 404, this is for tomorrow. 404, and on the SPY net, 400, 398. You saw these levels being traded today for the most part. 395 sort of gave you a pretty big bounce, but then it came right in here and just kind of got stuck. But this is for tomorrow. This is the end of the month. So if there were a potential squeeze to be had, because I always want to try to account for the upside here, they would need to get SPY over 404 for sure. And that's where the squeeze could happen, because if 404 gets triggered, all this gamma is going to expire. Market makers are going to essentially start unloading, basically covering their shorts that they're sitting on or having to sell in order to hedge against all this gamma. So this gamma, very interesting. It's a little lopsided to me, given that there's hardly any, call GEX up there. So keep an eye on a potential squeeze. Now, again, I said that this morning, and it was clearly not even close to happening. So very low probability that happens, but I'm still aware of it, given how biased I've been for the last month. I'm not going to let it happen to me again. All right, so here's the picture that kind of had me bullish. This was for Wednesday, the SPX. So this is when, this is tomorrow SPY. This is this morning. This was Wednesday SPY, so tomorrow's SPY or SPX. 4100 had me bullish just because, wow, they have quite a bit of GEX there, so I was thinking maybe a turn was coming. But here's the closing picture for that. So the vol trigger was 40.90. It got shifted down to 40.60. But we essentially in a fully negative gamma environment here. Not a lot to say here as far as, if I thought there was any hope for the bulls, it would have to come off a significant catalyst, I would think, in order to kind of escape the depths here. We're trading under the 4,000. You do see that build up here tomorrow on that 39.50, whereas SPY probably need to see the open interest. If the open interest tomorrow morning confirms, then I'm just going to go full bear on it as well. But I cannot switch to bull as of yet until I start seeing these pictures change a little bit. So the open interest might be telling. Here's the picture for Thursday from this morning, and here's what it looks like now at the close. Again, that vol trigger shifted down, similar to Wednesday's 40.90 to 40.60. This one changed from 40.95 to 40.60 as well. So again, there's your cap there on SPX at 40.60, or the SPY 404 as of right now. That could shift in the morning. 40.10, there's a wall right there. I could very, very well see that be in the top like high of day sort of thing for tomorrow. I wouldn't see markets trying to get up into these areas with Thursday looking like this too. So you get the next 2 days looking like this, and then you've got Friday looking like this. So not a lot of positioning happening yet, but it's a little bit cleaner of a look. So I'll watch the Fridays, trying to see if that 39.50 builds up. We're also watching Thursday to see if they can also build some lower gamma as well. But we still got to trade tomorrow, and as of right now, tomorrow is looking pretty bearish. Here you go. So here's tomorrow's look. Looking like 39.50 likely to be a target to the downside. So doesn't mean it goes right there. You know, these guys, they do what they did today. They'll run it up, you know, in the overnight and use that sort of as a way to get out. So if that's going to continue, look for some kind of ramp overnight again, maybe into 410, 4010, 4020 as to be like a high, and then start looking for that downside into the cash session. VIX, I'm going to start incorporating the VIX as well. Here's the total net GEX for the next 98 days to expiration. 24. As long as we're above the 24 vol trig, expect volatility, right? So you're under all the vol trigs on SPX and SPY, and you're above the vol trig on VIX. It doesn't necessarily work the exact same way, but I've been using it that way, and it's been, you know, kind of combining it all together has been really useful for timing. So as long as we're holding these levels, I do expect 30 to be hit. I don't know if it's going to happen this week. Not a lot of gamma sitting here. Maybe, you know, it might just be kind of stuck here, which would be good. I would like it to actually sit here for another week. That would allow for another leg up. So another leg up if you're a bear. Seeing some massive levels being built up to the upside, like someone's preparing for the apocalypse again. So this might, you know, in a month or two, create another squeeze when all this open interest starts to get, come up for expiry. Then we start looking for the upside again. But as of right now, what's happening is, folks are really, really short on the VIX, because of all that suppression over the course of the last few months. So I think, they're getting squeezed right now in the VIX, and it's just a slow, grindy process because the VIX doesn't move like a normal stock. Here's the look for tomorrow. There's an expiration on VIX tomorrow. A lot of gamma to the upside. A wall at 26. I do expect that probably to break as we did close above it. Potentially 28, 29s tomorrow, 27s, very possible. 30. I don't see 30 in the cards with this picture, but just because there's so much gamma into the middle of September and into October, not a lot of gamma actually on a relative basis for tomorrow essentially. So we're looking at 200Ks. So I wouldn't expect a ton of movement on VIX tomorrow, but I do expect it to hold tomorrow, and this would be the look into next week. So still a very positive look, at least for the short term. So the next couple weeks, VIX going to be holding levels. VIX going to be moving up. It's going to be sort of like wait for VIX to bottom, and then that's when the top will come in for the indices, that kind of thing. So hopefully this helps you, and hopefully we don't get too biased, and we get our mojo back here making these calls. And if you like this, make sure to hit the like button, subscribe. We'll see you next time.